What's going on, guys? Tempo Trades. In today's video, I'm going to teach you how I am using this market crash to potentially create millions of dollars in wealth. So as you guys know, we were almost back at all-time highs and we're almost down 30% from the high. And you might ask yourself, why is this happening? Well, the main reason is because of tariffs, right? Trump felt that other countries were tariffing us unfairly and he decided to put tariffs on other countries. China retaliated, got pretty aggressive, and it had a back and forth battle, which has been negatively affecting the stock market. Now, this is the fear greed index, basically showing the common consumer, if they're greedy or fearful. And the point of this is there is opportunity in panic. A lot of people overreact to news, they panic and they don't think rationally, okay? There is opportunity when people panic, and that is where wealth is created. If we just go back in history, you can see some of the major crashes of all time. First off, I want to start with the dot-com bubble. You can see right here, this little down move was created by the dot-com bubble. Then you have the 2008 financial crisis right here. You also have 2018. I don't recall what this was. There was COVID up here, right? You have like COVID right here. You have possibly some Russia-Ukraine news right here. But the point is, chat, no matter when you buy, historically speaking, the market will always go up, okay? Whatever happens, whether it's war news, tariffs, whatever the case may be, people panic, people sell, but if you just keep buying and you hold good companies and the S&P and good index funds for 10, 20 years, you're almost guaranteed to make a profit in the long term. That's exactly what I've done. You could see here, these are my long-term holdings, and all I did was in February of 2023, I put an initial investment and I bought money every single month. I just bought some stocks I liked, put the same amount, and after a little over 2 years, I'm up $25,000 basically doing nothing. I'm not day trading. There is really no skill in this. I am just picking companies that I like, that I think have, good value and that will perform well over the next 10, 20 years. And I'm just buying them over and over and over again, and I'm not panic selling. And if we go back to this chart, this is another good opportunity, man. If you look back at this chart, right? What are you going to tell yourself? If you look at this chart, you would say, wow, I should have added a ton right here, and I should have added a ton right here, and I should have bought way more right here. And guess what? More than likely, this is going to be the same exact thing, where we're going to look at this little market correction right here and tell ourselves, damn, I should have bought more, because fast forward 5 years, we could very, very well be all the way up here. All right, so again, the whole point of this video is basically just showing you that if you want to day trade, that's fine, and you can make profits day trading, but you need to be funneling your investments into safer and almost guaranteed revenues of income, right? Real estate and long-term investing are amazing. So whether you have a real job, whether you have trading profits from day trading, I think you should be funneling a percentage every month into a long-term portfolio. And let's get into the basics on how I would do that. All right, first of all, just off the rip, I use M1 Finance. I just really like their infrastructure and their interface. There's a lot of other popular ones out there. You have Charles Schwab, you have Fidelity, Ameritrade, et cetera, et cetera. So it doesn't really matter what brokers you use to actually invest for your stock portfolio, but just pick one. Personally, I use M1 Finance. All right, now we have a compound interest calculator. I'm just going to run you some brief numbers and show you how powerful this is, okay? So let's just say initial investment is $10,000. That is what you're putting in your account on day one. Let's say you put $1,500 a month for 20 years. And the estimated interest rate you will get is 8%, okay? If we go to the S&P 500, the average return is 10%. Normally, you get 8 to 10%, okay? Some years, like last year, it was crazy. We got 20%. This year, it's not looking too good. We'll probably get less than 10%, but over a long period of time, it's going to average out to that 8 to 10% area. So I'm going to go on the low end and say 8%, all right? We're going to be compounding this monthly, meaning we're going to make a $1,500 contribution every single month. And if you calculate it, your $10,000 will turn into almost 1 million in 20 years of holding, okay? Assuming we continue to get the average rate of return, 8 to 10%, which we've gotten the last 100 years. I already showed you. Look at this. Over the last 100 years, this is just NQ, and it dates back even further, but we have gotten that rate of return. So again, you could play around with these numbers. I mean, you could do even less money, but then hold it for 30 years instead of 20. And you're going to get 1.7 million. So, you know, I'm very, very confident that no matter what happens with day trading, no matter what happens with real estate, if I just do this in 20 years, when I'm 40 years old or 50 years old, I'm going to be a very happy camper, and I'm going to be a lot wealthier than I was right now. So again, this is an opportunity. This is a very, very good opportunity, guys. People are panicking. There's a very big sell-off that's been happening in the market. We were just at 22,000 a little over a month ago in the NASDAQ, and we went all the way down to 16,500. That is crazy, absolutely crazy. So I'm just making this video to tell you, please consider making a long-term portfolio. Put money in, forget about it. In 10 to 20 years, you will thank yourself, okay? So that is pretty much it. Again, these are my long-term holdings. If you want to copy me, you don't have to. I just recommend you pick companies that you think will be around in 10 and 20 years, right? You don't want to pick meme coins. You don't want to just pick random companies. Pick a company. Google. Do I think Google is going to be around in 20 years? Yeah. I mean, they're the leading search engine in the world. I don't see them going anywhere. So that's why I picked them. Really, the only risky one I have in my entire portfolio is PayPal. I think every single other company here is almost guaranteed to still be running in 20 years. So that is pretty much it. That is my whole spiel. I'm going to look back on this in a year, 2 years, see how big my portfolio has gotten. Right now, it's around like $120,000. And again, that was only with a $25,000 investment. I put in $25,000. I'll just give you my contribution. So $25,000. I usually put in a couple thousand every month. I'm just going to put in 3,000. It really varies. I take a percentage of my stock, my prop firm trading winnings, and I'll just put it in here. So I'm going to do 20 years, 8%, and that will be $1.9 million. Okay. And yeah, we're just going to keep on holding, man. We don't sell in the panic. Panic creates opportunity. And that's pretty much it. Thank you guys so much for watching. See you on the next one. Take it easy.